a comprehensive look at trends, fund profiles, and more in Exploring ETFs.
We're going to check out some top-performing ETFs, more specifically, top-performing ETFs of this 10-year bull run in the stock market with our ETF Research Director, Nina Mishra, who's right here with me, as always. So you say that this 10-year bull run is one of the most hated stock rallies in history. Why?
Yes, so the bull market turned 10-year-old, and it is the second longest bull market in history, and a lot of wealth has been created during this period.
Right.
But many investors have remained on the sidelines because this is the most hated, what we say, the most hated bull market in history, because people had lost a lot of money between 2007 and 2010 when stocks plunged.
Right.
So they remained skeptical of stocks. They did not join the rally. But one thing we have seen is this surge in usage of index funds and ETFs. Investors do not want to bet on individual stocks. I mean, even those who are investing in the stock market. Instead of betting on individual stock, they want to play the entire market, invest in the entire market or a particular segment of the market using index funds and ETFs. The S&P 500 index is up more than 300% since 10 years, its level 10 years ago. But there are many ETFs which have done much, much better than that.
I can understand the skepticism, especially when you get in these periods where the market just does a lot of sideways.
Right. And there have been so many periods of those sideways movement in the past few years.
And this year notwithstanding.
Exactly.
Even though the year is still young. So you've brought 5 examples with you of some of the top performing ETFs here. The first one being the First Trust Dow Jones Internet Index Fund.
So Internet stocks have done really well. And so the first two top performing ETFs are Internet ETFs, as obvious from its name. It's an index ETF. It invests in internet company, ticker FDN. It's a market cap weighted ETF. And for taking a look on this ETF, we can go to the quote page on Zacks.com, and the expense ratio is 53 basis points. And we can also go to the external home page of First Trust, the provider of this ETF, to look at other details, including the holdings. So as you would expect, Amazon, Facebook, Netflix, Salesforce, these are its top holdings.
All the big names.
All the big names.
And then Invesco Nasdaq Internet ETF is the other one.
So this also is an Internet ETF, ticker PNQI. It invests in Internet companies, US-listed Internet companies. So it includes some Chinese companies too that are listed on US stock exchanges. So again, we can go to the quote page. The expense ratio is 60 basis points. These are, specialized niche ETF, so they are slightly more expensive than broad market ETFs. You can get the S&P 500 ETF for 2 basis points now. These are more expensive, and you can go to Invesco quote page for this ETF, and as I mentioned, largest and most liquid US listed companies. So when you look at the portfolio, you see similar names, Netflix, Facebook, Alphabet, Amazon, but you also see some Chinese companies, Baidu, JD.com, because they are listed in the US. So it holds US companies as well as other companies that are listed in the US. That is the main difference between these two ETFs.
I see.
But their performance has been almost the same.
And then Invesco also has an S&P 500, a Pure Value ETF.
Yeah, this is an interesting ETF because stocks fell so much during that period at the height of the financial crisis. So deepest value stocks have done really well over this period. And this is an interesting ETF, Pure Value and Pure Growth. Those indexes actually divide the S&P 500 index into three buckets, 1/3 into pure value and 1/3 into pure growth. So those are the stocks with deepest value characteristics or strongest growth characteristics. And there is no overlap between these two buckets. So if you look at this ETF, in fact, I did a podcast with Invesco on these pure style ETFs, and it's a very interesting podcast. So if you want, you can take a look at that and listen to the podcast. The expense ratio is pretty reasonable, 35 basis points. Dividend yield, being value stocks, is pretty attractive, 2.22%. You can go to Invesco website for this ETF, learn more details. You can also look at the portfolio, and you see familiar names which are trading at attractive valuations. Baker Hughes, Ford, Prudential, Valero Energy, MetLife, these are the top holdings. Financials, consumer discretionary and energy, typical value sectors are the top sectors in terms of allocation.
Okay, and we can't leave out biotech. So
Yeah.
First
Yes.
Trust NYSE Biotech Index Fund is the one, FBT, the ticker that you want to
Yeah,
bring to our
this is
attention.
an equal weighted index, as obvious from the name. It holds biotech companies, and being equal weighted means that it has a lot of tilt towards smaller mid-cap biotech companies, which are usually the targets for acquisition, whereas market cap weighted biotech ETF focuses more on the bigger heavyweights in the industry. So the smaller companies, as I mentioned, they are usually acquired by the bigger companies, so that is why this equal weighted ETF has done pretty well. Again, you can go to Zacks.com. It has an expense ratio of 56 basis points. You can go to First Trust website for this ETF, and you can look at holdings and other details for this ETF if you want to. And as I mentioned, a lot of focus on smaller companies. So you will see some well-known companies like Celgene, but a lot of other smaller companies as well, which have done pretty well over the past few years.
And generally, you can't talk about ETF issuers without mentioning Ishares.
Sure.
So the Ishares U.S. Aerospace and Defense ETF is the one that you want to talk about.
So this is, the ticker is ITA. Aerospace and defense companies have also done very well. It's a market cap weighted ETF. So market cap weighted ETF means, as I mentioned already, that a lot of focus on heavyweights in the industry. This has highest allocation to Boeing, which is the
Yeah, I was going to ask you about that.
which is the heaviest stock in the industry. So obviously its weight will depend a lot on Boeing's share price movement.
Yep.
And of course it has been hurt over the past few days because Boeing stock is down like more than 10%. But over the past few years, Boeing did very well. So that is why this ETF is one of the top performers of the bull run. You can go to the quote page on Zacks.com. It has an expense ratio of 43 basis points. You can go to iShares webpage for the ETF, and as I mentioned, if you look at the holdings, Boeing is almost 12%, United Technologies, Lockheed Martin, Raytheon, all heavyweights in the industry also get significant allocations.
It's going to be interesting to see as the full fallout is realized in this Boeing situation.
Yes, and if you do not want a market cap weighted ETF, you do not want the fate of the ETF to be determined by a few large holdings, then you can look at an equal weighted index ETF in the industry.
That'll help mitigate a little bit
Right.
the risk. Okay. Do you own either of these?
I do own ITA in the ETF investor portfolio that I manage for our clients.
And you have a chart on how they all stack up?
So as I mentioned, the S&P 500 index is up about 340% during this 10-year period. The two internet ETFs are up more than 850%,
Wow.
FDN and PNQI. RPV and ITA and the biotech ETF FBT, they are all up between 600 and 700% during this period.
All right, and appreciate the information. I'm sure you'll follow up on that Boeing situation as the story progresses. Don't forget, there's always more ETF information on our website, Zacks.com. In the ETF section, use the Funds tab in the top toolbar to help get you there. Nina mentioned it already. I'll mention it again. Nina does a ETF Spotlight podcast, generally weekly. That's on the podcast page of Zacks.com. Go all the way down to the home page. Click on the word podcast, and that will take you to that section. With Nina, I'm Terry Ruffalo.